Send. All right, good afternoon, everybody. Phil Resch here, and just want to say thank you guys for joining today, our weekly calls. Today, very happy to have a special guest on. One, because it alleviates me from having to do all the speaking. Two, it is I can talk till I'm blue in the face, but we always call it the parent effect. I'll say something and everyone will be like, yeah, yeah, yeah. You bring someone else in, like, holy cow, this is a great idea, Phil, we should do this. And all of a sudden we're off to the races. We have Nate, I'm gonna butcher it, Imbergamo.
That was perfect. That's
So
literally how you say it. So,
yes. So, this is, yeah, I see the comments. Anyway, what I want to say is that this is, National Life Group Day. Normally we have Marco Campa, who is our regional VP. And Nate, I would say you're the internal. Is that a fair statement?
exactly. So I'm
Okay.
back at HQ here. Marco's backup.
Yeah. So what I would say is the RVP, because I've played both roles. I was an internal wholesaler for a little company called MetLife, regional VP with AIG. Let's be honest, the internals are way more important than the regional VPs. Nate is going to talk today about some great changes that have happened at National Life Group. I will not steal his thunder. Nate, I'll let you introduce yourself and take it away.
Sounds great. Well, thank you for having me on here, Phil. So I am Nate. I am with National Life for the last 3.5 years now. I started on the inbound phone call side of things. So any kind of questions, life, annuity, anything that comes up during the sales process, I've answered a ton of those questions in the past. And for the last just over a year, I've been supporting Marco in all of his sales endeavors. Kind of his backup for all the product info and illustrations, applications, all that. Um, and today I will be telling you not only about FlexLife 2025, so our newest version of our flagship IUL, but also the Rapid Protect a little bit. So we're going to be touching on that as it's another addition to our IUL lineup, but it's instant decision. I'm going to get started sharing my screen here. I do have a presentation for you. Um, and then, oh, here we go. So we're going to go through this first, and given some time at the end, Phil has asked me to also cover some illustrations. Um, I like to do this really. If you have any questions, feel free to interrupt me or go whenever. But up to you, Phil, if you want to handle that differently.
Now, I was going to say the big thing that I would ask is if you guys have questions, use the little like your React at the bottom of the screen. You can, do the raise hand. Or if you want to put it in the chat with the smart Alex, comments about never listening to parents or me, you could do that too. Um, or if we find it topical, I might just interrupt you, Nate, but fire away. Screen is looking good.
Sounds great. All right. So, as I mentioned, we've got our full lineup now. So, the instant decision, Flex Life is right in the middle, and then Summit Life, which I won't be focusing on today, but that's for our more affluent, so max funding, $1 million plus face amount product. With Flex Life, really, we've enhanced the living benefits and the cash accumulation potential. So, if I could sum up two things on it that we've really ramped up, it's living benefit opportunities and upside potential. You're probably all familiar, you've seen these puzzle pieces. So, a big part of our marketing and everything because it really has still the lifetime income. So, that's going to be a way to use that cash accumulation for lifetime, not just loans. some product specs here. This is just to give you an idea. So this is still starting at 50,000 for the coverage here. Um, a couple things of note on here that are different to the previous version of Flex Life. We have an accumulation value bonus that's going to start sooner. So starting in year 2 now, and we're planning to increase it in year 10. That's why you have may increase in year 10. And then most of the other changes are going to be to the living benefits, which I will highlight soon. So our full suite of living benefits, we've got the accelerated benefits. So that's your terminal illness, chronic. I'll go into those, but now a more premium chronic care rider. So this is going to be an addition to our base chronic illness rider. So really exciting there. Fertility Journey Rider is a really nice thing to add in as a by the way to your clients. Hey, this can also help you in the event that you're going through fertility treatments. We will actually put an infusion of cash value into the policy. And then value added services. I'm going to explain what that is towards the end, but I think it's honestly, a really important complement to all of the accelerated benefits riders that we have had for quite a while, but it's going to give it a more personal touch. So we'll get into that in a few minutes. Just a reminder of all the living benefits that we offer. So we've got your terminal illness rider, chronic illness rider, critical illness, and critical injury. So that's a really uncommon one there. And then Alzheimer's disease, which we're still the only carrier with an Alzheimer's rider dedicated to Alzheimer's disease. A
Hey,
refresher here. Yep.
Nate, can you explain the difference between critical illness and critical injury? Unless you're going to do it in this. If you are, I'll shut up, but just want to make sure.
Yeah, I'm going to have a slide that's going to cover all the triggers on there. So we will be there in just a couple minutes. As a refresher here, what you can actually use the accelerated benefits for. Remember, this is not any sort of health insurance. This is collecting your death benefit while you're alive because you have a life-threatening specific illness. So you can use these benefits in most states. You can see the disclosures on the bottom of any limitations. Sorry, Massachusetts, but you can use these for most anything. And we allow acceleration for up to 100% of the death benefit. Terminal illness rider, this one's been around for the longest. Ours is based on if you're diagnosed terminally ill within 24 months. All of these accelerated benefits riders, except for the new one that I'll be mentioning, have zero cost to your client. So when you apply with National Life, you are automatically applying for the riders, and it does not cost your client anything extra to have them on the policy. The Alzheimer's disease rider is standalone. And while if you have Alzheimer's disease, you would qualify under the chronic illness rider, likely. This is a dedicated to the diagnosis of Alzheimer's disease or Lewy body dementia. And it's going to be a better payment structure than chronic illness because it gives you a lump sum upfront, which is really important when you think about the upfront cost of getting somebody with Alzheimer's or Lewy body dementia, the care they need when they need it. So here we go into the actual triggers. And one thing I would really like to point out is a lot of riders are out there. So critical illness and critical injury, but we have the most triggers out of any carrier. So if you see all the different triggers on here, there are some states that have different definitions, like California, specifically invasive cancer. But just to name a few, blindness, I mean, you can see them all here: blindness, cancer, heart valve replacement, major organ transplant. But then critical injury is going to be coma, paralysis, severe burns, traumatic brain injury. Something really important to note that is not on this slide: we underwrite based on hobbies, not based on occupation. So I'm not saying we're going to guarantee that any firefighter you talk to, we're going to offer the critical injury rider. There might be something else that disqualifies them, but being a firefighter alone will not disqualify them. So things like that, I think, are really important when we're looking at these benefits. Plus, critical injury is rare to see out there. The rider, that is. So chronic illness, the triggers for this are going to be something I want you to keep in mind for the next part as well. So this has to do with 2 out of the 6 activities of daily living or cognitive impairment. And these have to be happening for 90 days before the client can qualify. So unable to complete 2 out of the 6 ADLs, you qualify for chronic illness, which pays 2% of the death benefit per month for up to 50 months, but is a discounted death benefit. So it's not going to be a dollar for dollar. You're getting 2% of the accelerated benefit per month. With premium chronic care, it is a dollar for dollar acceleration. So this will be a for cost option. This is the new premium chronic care rider. So all of these benefits have been on FlexLife before, but premium chronic care is really an enhancement to the chronic illness, I guess, segment of the living benefits on here. And I think this is really important to know because this is not long-term care insurance, but it is a way where the same qualifiers under the chronic illness rider, now you have your life insurance policy and you can tell the client exactly how much they would get for the chronic illness payout. Assuming they choose the premium chronic care rider, they will be able to choose between either a 2% or 4% monthly acceleration. So you're going to be able to see on the illustration and do the math out on the calculator instead of having that present value amount that we see on illustrations of weeks past. You're actually going to see a dollar for dollar amount that you can pull up your calculator and say, look, 2% of this face amount that we bought you today paid out. You're paying for the rider. But so on the illustration, again, your premium chronic care, you're going to see a higher value. Yes, really good question, Dina. So the annual recertification is going to be if you take the annual payment option there, you're going to be having the client have to reattest that they are unable to complete 2 out of the 6 activities of daily living after that 1 year. So if they were no longer, like, we would not be able to do the payout if they were no longer, uh, suffering the inability to complete 2 out of the 6 ADLs.
Is it
And
temporary or permanent?
it does not have to be permanent disability.
Okay.
So all it takes is 90 days unable to complete 2 out of the 6 activities of daily living to qualify for both the chronic illness rider or the premium chronic care. If you have the premium chronic care rider on the policy, you will have to use that. I mean, you're
You
paying
should
for it.
anyway.
You'll want to use it, right? But just a point on there. We keep the base chronic illness rider in case your client ever wants to stop paying that extra fee for the premium chronic care. So they'll still have a chronic illness rider backup. It just won't be the dollar for dollar option.
And I'll summarize Jaya's question because usually if you're claiming terminal illness, you won't claim another thing because you're terminal. But if you had a critical illness claim, for example, say you had a heart attack, are you able to, if you don't fully accelerate, are you able to claim another heart attack, or is that off the board? Like, explain if someone doesn't take a full acceleration, what happens?
Yeah. So if you don't take a full acceleration, there is a remainder death benefit on the policy. So you can accelerate on that, but it's going to be for a different category. It has to be for a different category at that
So
point.
if a critical hits, critical's off You can't do another critical. Now you only have two or three ABRs left.
Correct.
Okay.
Um, and one really cool thing that's also just not going to be in this presentation, if your client applies for a one of the living benefits, they say, this is my medical condition. I'm claiming under this rider. We will actually review that and make sure if we can offer, like with critical illness, right? If you're claiming because of cancer under critical illness, but we determine along with the results from your doctor that it's terminal cancer, we won't just give you the critical illness payout. We're going to go to terminal so your client can get the higher payout. So,
It's good to know.
yeah. And to give you a breakdown of the cost, so this is for a 35-year-old, 500,000 of coverage. This is the only rider added on here that costs anything. So 298 per year. And you can see it goes up over time, but not significantly. And this is the 2% option that we're illustrating on here. So the 4% does have a higher cost to it, but they have the choice. So it does have to be added at issue. So you cannot add premium chronic care later on. Okay. Any question before we move on to this next benefit? Any questions on premium chronic care? Okay. Oh, yeah. So this is the example that we have for the premium chronic care rider. Um, you can illustrate this too, but you can see how here it's much higher than the chronic illness payout. Plus, one of the other things to note on here is you're taking, say you have in the next page, we have that $500,000 example. Your 500,000 is now going down by $2,000 instead of using the entire amount to get the chronic illness payout. So it takes a smaller chunk of the death benefit, essentially. Okay. Moving on to this next part. So before we get into this, I want to emphasize the importance of the value added services. So before, when we've had these living benefits, right, it's a really impressive concept to most clients that their life insurance policy can even be used for themselves while they're alive. But as far as how to use that money once you have it, or the mental burden that comes with qualifying for one of those riders, we haven't had really an answer to that, right? We have our claims team that's going to do the best they can to give the highest payout we can offer, but there's really been no support system from National Life or any partner of National Life until now. So what we've done is we've partnered up with a company called Home Thrive. And what they're doing is offering these services that your client is automatically able to register for as soon as they get one of these Flex Life policies. It doesn't cost them anything. So this is another zero cost living benefit on the policy. And really what it's going to do is give them access to professionals that have expertise in all these different areas and at the very least can point in the right direction. So now instead of saying, okay, great, I have $800,000 from the Alzheimer's disease rider, right? Uh, you know, I can't figure out where to get into a home. The Let's say the daughter of the client now can reach out to this service and get advice on how to actually find the care that their parent needs for this. So, oh, oh, there we go. Okay. So you're going to hear this come up when it comes to Home Thrive, which is the company that we're partnering with for these value added services. There's a care circle that the owner of the policy gets to decide once they register for Home Thrive. And even as the years go on, they can add and subtract people from their care circle. So essentially, anyone that is involved in caregiving related to the owner of the policy. So it can be the owner themselves. It can be literally a neighbor that comes over and takes care of them for, a few hours a day. It can be a spouse. It can be a sibling. All those people can be added onto this and actually reach out to the service. And they will do research as far as where to find the care that they need. There's legal and financial is one of the categories on here. National Life will not be the experts on all the services offered through this rider. So that's where we are going to ask you to reach out to Home Thrive, which is the company we're partnering with for this. Um, we do also have the ability to change this in the future. So if at some point we see that there's a better fit to offer similar services, we can make that change in the future. But for now, we are partnering with Home Thrive. We've already got some training from them. They are getting involved in, making sure all this support is going to be in line with what we're offering here, right? So we're going to have um, their care team is based all in the US, and all of these different areas, they'll either email back and forth or actually get on a live phone call with you. So, really awesome service that's going to help you not just get a lump sum of money from living benefits, but also the mental burdens that come along with the ailment that got you that money, right? So, really awesome to add on here. Any questions on that, Ryder, before I move on to some income? Okay. So the last portion of this, right? Because of course we have the death benefit. We just went over the living benefits, all the accelerated benefits. But our lifetime income benefit rider, I want to remind everyone, it is on this Flex Life product as well. So after building up cash value, the client has the ability to flip the switch, turn on an income stream that is guaranteed for life. And because we are doing it through loans, it will, assuming the policy is not a MEC, it's going to remain tax free. The policy has to be at least 10 years old to activate this, and the client has to be at least 60. Um, but it's a really great way for a client to just turn on something that will continue to benefit them year after year, hands free. You don't have to worry about your loan interest rate. That's an option on the policy as well. But for the clients who want a more hands free approach to lifetime income from their IUL, that's what lifetime income benefit rider is for.
So it's like basically it's like a LERP, but you don't have to worry about anything. It'll do it for you.
Correct. So there is a fee, 65 basis points of the accumulation value, but that is only once you turn it on. So a client will have this automatically added to the policy if they're eligible. So just with some health ratings, it's not always offered, but it's going to be included by default. They don't have to do anything to opt into it at the beginning. At age 60, they can turn it on.
And just to kind of specify too for everybody, it's a cool value to have. One of the only carriers to have this option. And the big thing is that it will illustrate less income than a traditional LERP would. However, when you get to that point of 65, would you rather have one option or several options? Okay, so when I say one option or several, there's the guaranteed, there is the standard loans, there's the participating loans, variable loans. So you'll have several options to provide to your client who may want to be more conservative in their older ages and not take out loans like the traditional illustration shows. So it's a great value to have, and it gives your client another option.
Great question, Dina. So if the policy cash value goes to zero, we continue paying the same income stream, and there will always be at least a $15,000 death benefit. So you're still going to have, I mean, final expense right there, 15,000. So when they do pass away, there's a $15,000 death benefit, and $1,000 cash value is the minimum. Um, so really awesome to have on there. Plus, it guarantees no lapse. So while it illustrates lower values, you can actually have an IUL illustration with us that guarantees no lapse by turning on the rider. Like even if on the zero scenario where there's no interest crediting, there can still be a guaranteed no lapse. Okay. Bill, is this going to be review for us, or do you want me to cover this?
Yeah, I think we're good with that. Let's talk about some of the updates.
Cool. Full list of riders here. Anyone that's quick with a screenshot, you can capture this now, or you can see them on our website. But a ton of other benefits that I don't even have time to go through here. Um, So this accumulated value bonus that I mentioned before begins in year two. So that is a lot more in line with our large case accumulation focused product, Summit Life. And it's going to be a 0.25% bonus on all the strategies. And this is another incredible thing. We've increased the cap to 11% now on this for the S&P 500. The other volatility controlled indexes still have no cap. The participation rate has gone up. And I think very importantly here, if you look at our max illustrated rate for the S&P 500 cap focus, the US Pacesetter, and the Balanced Trend Index, they're all the same now. So a strong illustrated rate at 6.81. And now you really don't have to think about, you can really think about the index options you're choosing as far as what does my client want here versus what's going to look best on the illustration. All right. Any questions before I do want to touch on Rapid Protect here in just a minute. Oh, okay. If you do think of any questions on Flex 25, feel free. I just got to pull up Rapid here. Okay.
While you're doing that, what are the main differences between Summit and Flex Life for those who, want to know?
Yeah, so the biggest difference is going to be the $1 million face amount minimum on Summit Life. In general, with Summit Life 2, we have higher expenses in the earlier years, which why is that appealing? You can fit more money into the Summit Life IUL in the earlier years than you can on Flex Life. So that's why really, if your client is looking to max fund $1 million plus a face amount, so really you're thinking probably around 50,000 per year in premium or higher, that's where you're going to go for Summit Life. The bonus options are a higher percentage. They've had an 11% cap for a little while now there too. And then there's another flexible accumulated value enhancement to get more upside.
And just an FYI for those who do the juvie cases like 529 alternatives, you got $1 million baby, things like that. NLG looks very, very good for juvenile cases. On top of that, some carriers stop at 500K. You can get $1 million on a juvie as long as the parents have double the death benefit of the child with National Life Group.
Actually, so now on the juvenile cases, we're not talking about New York. Forget about New
No
York.
one cares about New York, especially
You can
now.
you can do up to, oh boy, to I want to say 250,000 of coverage, but it might even be 500,000. So Phil, I will have to let you know after the fact on that, but without any parents having coverage. So the 50% rule is only above either 250,000 or 500,000. I'll
Wow.
confirm with you right after this.
That's cool. That's cool. That's big.
Yeah. So, um,
Big
and
deal.
okay. And here we go. So, Rapid Protect now is really going to be our more protection focused solution now. So, oh,
It's drum roll.
here we go. There,
There you go.
sorry, my computer's chugging along here. Um, okay. So, Rapid Protect really is going to be for a different type of client, really. So, these are you guys doing a lot of like one call closes or just like people who want coverage quick?
It varies.
Okay.
So, I think from the standpoint of a lot of times work smarter, not harder. If you have a client who is in that standard range or whatever, you know what I'm saying? So yeah, I would say we're not like the final expense people, where we're just buying leads and stuff. But,
Hmm.
there's definitely a fit for what you're going to say in a second here.
Perfect. Okay. Good. So with this, it is 17 health questions. Once you answer those and submit the application, you find out instantly whether your client is approved or not. And one thing that I heard some feedback on that was really liked by people using this is it doesn't just tell you yes or no. It will tell you yes, no, or not for this product, but they might qualify for one of our others. There are
Cool.
two rate classes available on this one. So standard or express standard. Clients might fall below that express standard rating, and that's where they might be told you could still be eligible for the fully underwritten product.
That's really cool.
Yeah. And so 50,000 to 500,000 of coverage on this one. So there is a $500,000 death benefit maximum. Um, Really, as you can see here, this is protection focused and really a good alternative for those clients who might have gone for term for the quicker, more simple approach, but still want something permanent. So it's a really nice sweet spot there. And the issue age does go up to 60. So on this page, we, are not, it's not for anyone older than 60 years old.
That's still great. I mean, especially for a rapid issue product as you get older and older, that's amazing.
Yeah. And so, sorry, I don't, we covered a lot of this in Flex Life. So, um, S&P 500 is the only index option available on this. So there's a couple different options for it. So you still have your cap focus, your participation focus, and your 1% floor, but there's none of the volatility controlled indexes. Um, there are some limited riders on this as well. Not sure if you work with any clients that have like ITINs or no social, anything like that. This product wouldn't be a good fit. To do all the instant underwriting, we do need a social security number so that way we can run all of our third parties on this. There is a 15-year surrender period on this. So, in the interest of allowing this to be a more cost-effective protection focused product, there is a 15-year surrender period on this. Um, and across the board, there's a 15-year policy protection period. So this is where there's a minimum premium that as long as they pay that, guaranteed no lapse for 15 years. And you cannot convert to this product from term, which again, standard is the max rating on this. So it shouldn't be if that question comes up. And we do have a list here, something I can send Phil Phil, I can send this to you afterwards. We have a pre-screening guide on this. So while,
Ooh.
on Flex Life, we always get the question, can you send me the knockout list, right? The things that just automatically disqualify you from it. We haven't had that for Flex Life. We have our full underwriting guide and a few other pieces that help steer you in the right direction. But with Rapid Protect, we do have a dedicated flyer, which is going to show you all the sorts of conditions that will disqualify them for Rapid Protect. Again, they still might be eligible for the fully underwritten Flex Life or Whole Life.
Yeah, I send out a newsletter on Saturday mornings, so I'll be able to, if you send me the PDFs, I'll be able to add those to the newsletter.
Sounds good. Okay. Um, and so the accumulation value bonus on this one is more in line with the old Flex Life, where it starts in year 6. Um, and option A and option B are available for the face amount. So while the application process is still going to be really simple on this, there is the ability to design it really not the same. You don't have the same amount of features that FlexLife has, but in terms of the illustration, it's going to be really the same software that you're already familiar with on FlexLife, just watered down a little bit to not have, all the riders that you can turn on. And I don't, if you want me to go through this part, Phil, I can, but a couple things to just note on the delivery process that I do definitely need to cover. Once this policy is approved, your client should anticipate the premium being drafted within 24 hours. So that's one really important thing. They need to make sure that premium is ready to come out of the bank account within 24 hours. Um, Couple other technical things here because it's referencing all these third parties. To give you a true instant decision, you're going to want a good Wi-Fi connection. If it's a little slower, it can take a little bit to just pop up with the decision. Um, but you need internet for this. So e-app only, no paper apps for this product. Otherwise, we couldn't approve it instantly.
So, out of curiosity, for something like this instant issue product, are we not allowed to do it on like, so if we go through iGo through a different system versus on National Life Group's portal, will that matter? Or do you guys still use iGo that it shouldn't be an issue?
So we use iGo for this, but if because you're using through a,
Three
three
mark.
mark portal,
Yep,
so I it's on there. If you don't see it on there, let me know ASAP.
I
But
will.
yes, it's all through iPipeline eApp. So if you have any questions too on like the app, it's the same thing I'm familiar with
Yeah,
already.
yeah.
Um, and you'll also want your client to have their primary care physician information and banking information because again, this is all you're closing the sale during the application. So it is complete. There's no underwriting follow up. So you don't have to have any of those back and forths with underwriting. It is you find out right then and there, standard, express standard, or choose a different product, decline. All
Yeah,
happens when you click submit.
I was gonna say, will it like decline or say not good for this product or either or? Because just curious on the MIB hits. You know what I'm saying?
Oh, you mean as far as what it sends back to the database for other carriers to see?
Yeah. So if
Gotcha.
it's not a good fit, is it going to say, we're not good, or will it flat out say decline and it goes to the MIB that, Phil Resch applied for this and he's too fat, so, we declined him kind of thing. So
Um, I I need to find out that for you as well. That's a really good question. Um,
every once in a while I have a good one.
okay. And then I also owe you an answer on juvenile coverage and that pre-screening guide.
I'm gonna grill you, Nate. I told you I'm gonna grill you. You know, someone's
I
got to ask the hard questions. I'm surprised Vipul hasn't talked yet. I'm waiting for it.
I didn't expect it to be a cakewalk. Okay. Um,
Never is.
Just
so
waiting for it to end.
What'd you say? What'd you say?
I'm just waiting for the last moment.
Just remember, we have 15 minutes, so make it good.
and then yeah, I can show the actual illustration here. So, oh, there is,
There's your day.
yeah. Okay. So, any questions while I jump into, I'm going to cover a couple things in the illustrations if that works for you all. Um, sorry.
Here it comes.
So, but Nate, I think in this policy, is it possible, for example, for different strategies, let's say, can we add on to it as we go along, or is it like a standard IUL? Once you have taken it, that's what it is. Like your premiums are set or your face value is set.
The
Can you change?
premiums, the premiums are still going to be flexible. You can
Hmm.
change the death benefit option. As far as increasing, this is another thing I'm going to have to give you an answer on. After issue, face amount increases or decreases, I need to find out.
I think one of the thing is, for example, you buy it, let's say for your kids or for someone, and 1 year you are paying your set premium, but next year they had like a profit and they want to put more premium because one of the major benefits I am using IUL for me and for my family is for retirement income. So if you want to add to it, let's say I had a good profit this year. Let's say I sold 100 policies this year, right? And I want to add to it to say I'm going to pay extra $50,000 premium. Can I do that?
You wouldn't do that for
Yes,
this product, though.
not
Still,
50,000 probably wouldn't fit in here. Because
Just an example. I was just not,
right, right,
yeah,
right.
yeah.
So we'll still have the guideline premiums and the max non-MAC on here. You can still pay minimum premium or zero. So it still has the flexibility in premiums the same way the Flex Life does. Um, but one really important thing that you reminded me of here is this product does not carry the lifetime income benefit rider. So you're not going to, honestly, juvenile coverage, we can do instant approvals on the Flex Life, either like anyways. Let me know if I'm curious to see if anyone's had an experience where you've gotten an instant decision on the Flex Life. At the end of it, especially for juveniles, we've had ones that have it comes up with a message. It says this is eligible for instant approval. So it looks a little bit different, but it's confirming that yes, you're going to be able to get this coverage. Um, so I would steer more towards Flex Life for that reason alone and
So Nate,
lifetime
then,
income.
so then Nate, what would be my target clients over here? So if I'm looking to help someone, so what is the benefit of getting an instant approval? Like
Hmm.
nobody's looking for like I apply for an insurance policy now, I need an instant approval.
Uh-huh.
So why would we go for this rather than the policies like a Summit Life?
Hmm. Well, and you may not, right? So
Okay.
this may not be something up your alley, if especially if you're doing, all the field underwriting, you're already asking all those medical questions. You might not go for this.
Okay.
But if you have somebody who wants the coverage, they don't really, care about all the other benefits. They just want it right away, flexibility and premium. And to be frank, if they got standard on Flex Life,
Mhm.
standard on this and they're just trying to pay protection focus, this is going to be more protection focused. So you're going to have lower premiums. Um,
lower costs too. So,
right.
like Vipul, if you think about it, so what your focus is for this type of clientele
Mhm.
is not someone who's accumulation mindset. So, like, I'll give you a good example. Like, even
Mhm.
myself, 43, I have other avenues where I'm putting money for retirement,
Mhm.
but I want permanent coverage with a focus on death benefit. I don't want to go for
Okay.
labs. I hate needles, and I know I'm not going to get better than standard. So this would be the right fit for me because there is cash growth, there's living benefits, but it's going to be a lower cost product compared to a accumulation based product because what you're focusing on is death benefit as the first priority, not the secondary. So that's typically the situation.
Okay. But it's still an IUL, so if you can still like cash value grows, but
Mhm.
you can still take the loan out of your policy, right?
Yes, there's
Correct.
still cash, yes, but that is your secondary. So if someone had need for it, desperation, so to speak, last ditch, you as a professional would run in force with the carrier to make
Hmm.
sure that it's not going to lapse the contract either, and see how much they can take out without killing it, so to speak.
But can you structure it? It's still in. I'm just sorry for all these questions, guys.
Right.
I'm just thinking it's still an IUL. Why
Hmm.
can't I structure it for cash accumulation?
You can. So I'm going to show you that here in a
Yeah.
second. Um, a couple other points just while my computer is chugging to share the screen here. Um, what you will have the living benefits on this. So not the lifetime income, but you'll still have all the accelerated benefits riders. That is something I should have mentioned sooner, because I don't know about you, but I haven't heard of other carriers out there that are offering terminal illness, critical injury, chronic illness, and Alzheimer's on an instant decision product.
No, I don't think so. This is the first time I'm hearing that product, but because it has an IUL attached to it, so as soon as and it maybe just my mindset is geared towards if there's an IUL attached to it, there's obviously we can use it as a LERP. So with
Hmm.
all the benefits you have mentioned, that instant approval, all of these illness protection, like living benefits provider, I like that. But I was just thinking, okay, in addition to this, if I can solve it for cash accumulation, then it becomes a product of choice.
Yeah, it wouldn't be though, because again, like when they're death benefit focused, and obviously Nate, correct me if I'm wrong, but when they're death benefit focused, the pars and caps are usually lower. Um, and so you don't get as much of an accumulation growth as you would with the Flex Life or the Summit, essentially, because those are like with some other carriers that we have, they have a specific product for death benefit and a specific product for accumulation. And
Hmm.
so this is kind of that substitute for that. So you want to
Right.
you want to keep them in the right lanes per se.
Hmm.
Instant issue sounds sexy, but there's always trade-offs. There's always trade-offs. What are you getting for instant? What are you losing?
Losing.
And in
Okay.
this case, you're losing the ability to grow your cash as effectively as the Flex or the Summit.
Then why wouldn't I choose a term with those riders? That would be cheaper because if this is not giving me cash accumulation, it's only on a death benefit protection. I know it's permanent
Mhm.
and it's not giving me cash accumulation, then why don't
Yeah.
I offer a term which would be cheaper than this with adding all those riders for next 30 years?
You
If
tell me the
cost
day
is the
you're going to
main
die, I'll
driver,
give you the
go to
perfect
term.
product.
No.
Yeah. But
So,
yes, if cost is the main driver and they don't care about the cash value for it either,
Mhm.
yes, please go with the term because then you get all the living benefits and it costs much less. But
Yes.
it's not it's not forever. Um,
Yeah.
so, but to Phil's point here too. So look at this. We've got a 6% illustrated rate on here. So it's going to show worse for cash accumulation
Hmm.
than the Flex Life. It's got a 9.25 cap for the S&P 500 on the cap focus strategy.
Hmm.
In the illustration, and this is something I want you all to remember too, because this is going to be something that's applied across the board for our IULs. We're going to need people to start choosing in the illustration which strategy. So that's why as soon as I come in here, it's calculations unavailable. I've talked to many people already that think they've broken something. You haven't. You just need to come in here and choose an option right away.
Does that
And
scare
then,
you, Nate? Does that scare you at all?
oh boy,
Yeah. I'm sure you
it's
got stories.
it does. I'm like, oh no, did I do something wrong?
Nope.
Um,
Mhm.
They're
so
uplined.
and we have less solves in here too. So what the rapid solve is the default in here. So again, on that point of why would I go for this for cash accumulation? The default in here is to be protection focused. So as soon as you come in here, if your client says, I want 500,000 of coverage and I just want it permanent, want it tomorrow, and I want it to be permanent so I can change my premium in the future, you still have all these values over here that are the amounts you can change to in the future. You can still go to zero at for a month. Of course, you want to make sure there's enough cash, but it's just solving for the lowest premium based on the current illustrated rate of 6% to bring the policy out to maturity. So that is the default in here, which again further emphasizes this is really protection focused. And you can see here, there's going to be only the accelerated benefits riders, which are all automatically yes, because again, you don't have to opt into these unless in the state of California, you do have to opt in now
Okay.
to
So
chronic
Nate,
illness rider on this.
one more question. As you were saying, it's an instant approval. Let's say you have a client who's diabetic, who's overweight, who's got issues. Would he get instantly approved, or is it like still has to go through medical?
You wouldn't
Instantly disapprove.
you, so on that one, I'm
Instantly
not an
declined.
for full
So,
disclosure, I am not an underwriter, but that's one where I believe, based on a pre-screening guide, what it would do is it would tell you, hey, we're not approving it on this product, but you might be eligible for one of the other permanent products. It's fully
mhm.
underwritten. So I would not suggest applying for this product with a client like that.
Okay, okay. But sometimes clients do tend to misinform. So if the client does misinform and does put no, 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 and then accidentally something does happen, what is the position on that? The policy is enforced, but it was misrepresentation.
You mean if they lie?
Yeah, if
I
they
would say
lie
misrepresentation.
and the well, that's where a third party should catch that. So if their doctor has diagnosed them with diabetes, this is where the third parties, the Medical Information Bureau,
Big brother.
if you've
Mhm,
told your doctor you have an issue going on,
mhm.
you sign HIPAA on this. So we're
They'll
going to
be
know
there.
about it. We're going to know about any medication history.
Okay.
So if they're prescribed metformin,
S-
the system's going to pick it up.
So that's what I'm saying. So how is it an instant approval? Because I thought by instant approval is you apply, it's approved, but you're saying it still goes through that process, which a normal policy goes through.
No,
Because
it's
it's
not
not
the normal
guaranteed
policy.
issue. It's
Yeah,
not guaranteed issue, it's instant decision. So that's
Uh,
going to be the important difference.
okay. So it's not a guaranteed issue, it's an instant decision, and instant means you apply, you get it, or 24 hours, 48 hours.
15 minutes.
If you have a good internet connection,
Yep.
10 seconds.
Okay.
So Vipul, think of it this way: as you're filling out the rest of the application, they're running checkers behind the scene. So,
Okay.
like, if you put the social in, they're
Boom.
running stuff. You say date of birth, they're running stuff, and so as
The
you're
man
doing
behind the
it, it's
curtain.
working as well.
Okay. Understood. Understood.
Yep.
Exactly. Um, so you can still customize this one. And given the time, if you do want to do a more like in-depth illustration training at some point, I'd be more than happy to come back and do that. Um, but again, in here,
I was gonna say, I think we're gonna
Oh,
need to,
yeah,
because
yeah.
what I would say is, maybe Nate will have you come on the 20th or December 4th, unless anyone wants to come on Thanksgiving. I don't know how many people want to do this on Thanksgiving, but let's set up additional time to kind of go through the actual illustration software.
Mm-hmm.
Um,
Hmm.
because the big thing is that I want to make sure you're not rushed. And just to kind of recap, I think for everybody's sake, what you have here is some great stuff from NLG. Um, a pay for chronic illness rider, dollar for dollar reduction is huge. Instant approval, protection based IULs will help you accelerate for those clients who aren't going to be your marathon runners, if you will. Um, but and then on top of that too, just the strength of the company and versatility is great. And how often can you say your internal wholesaler is Eli Manning? So I mean, that's just amazing. Um, so Nate, if you don't mind, can I put your contact info in the newsletter when I send it out in case people want to
Yeah,
like
please
have
do.
questions and stuff like that?
For sure. I
Yeah.
If you want to ask me any of this, I think Vipul is gonna give me a call at some point. I am happy
Guaranteed.
to dive into the details with you.
Guaranteed. So I'll cut bait because I'm getting the missus saying it's dinner time. So yeah, Vipul, I think you just answered your question. Yes, you can connect
Yep.
one-on-one. But Nate, thank you so much. We'll set up another time to kind of do some nitty-gritty stuff. And
Hmm.
we just want to say appreciate your time. I know it's 6 o'clock Eastern, so I don't know what else you guys do in Vermont other than drink maple syrup and, hang around and
Oh,
whatever.
that was my evening plans. But
I- All right.
no, I
Well,
know we covered a ton on this call, so thank you all, and please let me know if you do have questions. I'm sure they'll pop up.
yeah, thank you for so much for the time, Nate. You guys have a great day, and we'll talk soon.
Thanks, everyone.
Thank you. Thank you,
Thank you.
guys. Thank you.
Bye.
Bye.